U.S. stocks closed higher on Friday, marking the end of a turbulent week as U.S. Federal Reserve officials calmed investor fears over a potential liquidity crisis in the banking sector. The Dow climbed 0.4%, the S&P 500 rose about 0.5%, and the Nasdaq gained 0.3%. In separate appearances, three regional Fed Bank presidents said that their confidence in the banking system is what allowed them to stay focused on inflation and implement a 25 basis point rate hike on Wednesday. But worries over potential contagion spreading from regional banks to their larger peers persisted, sparked by a sell-off of European bank shares. That sell-off was prompted by the rising cost of insuring Deutsche Bank's debt, coming on the heels of the state-sponsored buyout of Credit Suisse. U.S. traded shares of Deutsche Bank dropped 3%.
We continue to see weakness and stress in financials.
Bonrian Capital Management founder and CEO Shana Sissel says we are starting to see more divergence in the performance of various sectors as the economy softens.
And we continue to see weakness and stress in cyclical areas. Areas that are doing well are things like utilities, staples, things of that nature. So you're seeing the market kind of bifurcate between things that should do okay as we see economic stress versus where the actual stress is.
Among other movers, Activision Blizzard jumped nearly 6% after the UK competition regulator dropped some competition concerns in the Microsoft Activision deal.
Bank stocks tumbled again on Friday. As the week ended, investors once more grew concerned that the crisis for lenders may not be contained. That helped drive a down day for shares in Asia and then saw Europe open in the red. The regional stock 600 index was down close to 2% in early trade. Deutsche Bank led the way lower, falling as much as 13%. Traders were alarmed by a jump in the cost of insuring its bonds against default. Credit Suisse and UBS tumbled too, both falling around 7%. Reports by Bloomberg suggest US watchdogs are investigating the pair, among other banks, for helping Russian oligarchs evade sanctions. That might complicate the rescue of Credit Suisse by UBS, which Swiss authorities want to push through in as little as a month. This week has also seen volatility over the Federal Reserve's move to hike rates again. CapWealth chairman Tim Pagliara says rising rates are the backdrop to everything that's going on.
Well, I think the market volatility that we are seeing today is just a reflection of the challenges that the Federal Reserve created by raising interest rates 9 consecutive times in a short period of time. And so they have had to walk back some of the things that they were doing.
Uncertainty over the next steps by US authorities may not be helping. Treasury Secretary Janet Yellen has stopped short of saying what banks most want to hear.
This is not something that we have looked at,
which is that Washington will guarantee every cent of the $19.2 trillion on deposit at US lenders.
There is no such thing as free shipping. Amazon and other retailers who tout the benefit are actually adding fees for faster delivery, raising minimum purchase requirements, and scrambling to make other changes to keep so-called free shipping from draining profits as costs climb and online sales fall. And those costs are shifting to consumers who are struggling with financial issues of their own. Amazon raised the price of its Prime subscription and set a minimum purchase price for free same-day shipping and a charge when orders fall below that. It also quadrupled the minimum price for free Prime shipping from its struggling online grocery business. And the e-commerce giant is not alone. Popular apparel chains like Zara, Abercrombie & Fitch, and Foot Locker are drawing the line at losing money on a service consumers have come to expect. Kelly Eisen, the owner of Einstein Pets in Atlanta, told Reuters she ended free shipping last year on purchases of some items and switched to flat rate shipping. It is an open secret that most retailers raise product prices to subsidize free shipping. Still, product inflation and soaring shipping costs are making the service unsustainable as the prospect of recession threatens to wallop already flagging online spending.